One of the most common ways of acquiring a car in Kenya is through asset financing. Asset financing allows many Kenyans to own a car without having to bear the full financial burden of buying a new car. As you know, the car prices are going up and it can cost you quite a fortune if you pay upfront for a new car. However, with car financing, you pay a small deposit, you get to use your car either for personal commute or for business. As you make the money, you can pay back and own the vehicle through small monthly installments. However, car financing is a form of getting a loan. As with any other form of credit, it is only available to those who qualify. Here are 5 tips that can help you ease the asset financing application process when you need it. Number 1, understand your financial position. This involves creating a budget for how much you can afford in monthly installments or as a down payment, and factoring in your income, your expenses, and how much of it is left to cater for paying back the asset financing loan. Number 2 is explore your options. There are many options when it comes to car financing in Kenya. Banks are offering with various terms. There are also car dealerships that offer car financing arrangements, microfinance banks and microfinances that will allow you to take asset financing with various terms. Depending on the form of option that you opt for, there will be varying terms, including from SACCOs. Also, some SACCOs will allow you to take asset financing. Explore your options and see which best works your circumstances. Number 3 is compare the interest rates offered by these financial institutions. Each of these options that you explore, probably banks, you will find that maybe the interest rate is lower compared to maybe a microfinance, but there are also other costs that come with the bank. So probably the car will have certain limitations. It has to be a 7-year-old car or something like that. Explore all these fees and interest rates and see which one makes sense for you. You could also consider how much you are able to raise in terms of the down payment. That will also affect how much interest you will be paying for the various lending partners. Number 4, factor in the additional costs that will come with owning a car. This includes insurance, for example, car servicing. It's important that you factor in all these new costs that you may not be fully aware until you own a car into your budget, so that you do not strain your monthly budget or you do not default on the asset financing. These charges may also include penalties for late payments for your monthly installments. They could also involve other costs like having to deal with government services fees, for example, when you are changing the logbook to reflect the joint ownership with the lender, and also discharging that car to reflect your individual ownership after you have cleared the loan. Most institutions in Kenya will also have the cost of a car tracker. Some of them will charge an upfront fee, others will charge a monthly fee, which you have to factor in when you are calculating the cost of getting the loan. Number 5 is to consider getting a higher down payment. This allows you to qualify for more options. Increasing the down payment that you pay for when doing car financing allows you more leeway in terms of negotiating the cost of the loan, or even the pool of financial lenders who can finance you when you're buying a car. Money254.co.ke has written more about car financing, including the various options that are available to you in Kenya. Click on the link to learn more.